The U.S. added 272,000 jobs in May, far more than the 180,000 that was expected. The sectors with the most job gains included healthcare, leisure, and hospitality. And we've got team coverage to break down the hottest sectors. Alexandra, Canal, Madison Mills, and Anjalee Khemlani tracking the gains. Ali, let's start with you and the jump that we're seeing in retail jobs.
Yeah, Brad, the BLS calling out retail trade in the report. We did see trends continue to edge higher with 13,000 jobs added in the month of May. Now, that's roughly in line with the average monthly gain over the prior 12 months when we saw the retail sector add 8,000 jobs. Now, within retail, building, material, and garden equipment, along with supply dealers, added 12,000 jobs in May, while job losses occurred in department stores, about 5,000 losses there. And then furniture and home furnishing retailers, that also saw a loss of jobs by about 4,000 on a year-over-year basis. The unemployment rate for wholesale and retail trade did tick down to 3.7% on a yearly basis. That's down from the 4.4% seen in May 2023. Of course, it's been a bit of a mixed bag for retail so far this year. We've seen increased layoffs across the sector, while the U.S. consumer has showed signs of slowing. We got the retail sales report for the month of April, flat in the month. So the consumer not unstoppable as we once thought. Later this month, we will see the pulse of consumers when it comes to retail for May. But again, jobs still continued to be added, 13,000 jobs for retail trade in May.
All right, Ali, thanks. Let's get over to Anjalee. Andrew, taking a look at the healthcare industry. What are you seeing there?
Huge gainer there, of course, with the average monthly gain of 64,000 jobs over the last 12 months. We've also seen that the total number, 68,000 in the last month, 50 compared to 56,000 in April. So a huge gain there. Most of the gain ambulatory, 43,000, which is the biggest number. We're going to focus on that in a second. And then hospital adding 15,000 and nursing homes adding just 11,000. Interesting to see that number there because we know about the demand for the aging population. We've seen those demand for the healthcare services post-pandemic, and we know that there's a majority now insured population, whether through Medicare, Medicaid, or commercial. And so we've seen that push to demand in those non-hospital settings, and that is coinciding with the increase in telehealth, increase in retail, as well as subscription-type models like Amazon's One Medical. But we've also seen weakness on that retail side. Companies like Walmart, Walgreens, and Dollar General ending their healthcare efforts in the past year. So that is going to create a bit of a shuffle in where these professionals are going. The numbers also hide the fact that the sector continues to see high attrition from burnout, healthcare professionals seeking more work-life balance in alternate care settings. But that doesn't hide the fact that we do see this ongoing push into the alternate care and to that outpatient setting. That's why those ambulatory numbers continue to be so high. And so we have to keep an eye on how all this pans out for the upcoming month. And then we know that there's also seasonality during the winter months, increase of the respiratory virus season. So all of that playing a role in how we're seeing this pan out.
All right, hugely important. Thanks so much, Anjalee. Maddie, leisure and hospitality was unchanged. You're tracking that in the month, but it had a huge gain in May, right?
Yeah, Brad, so this is going to be a critical thing to watch for the Federal Reserve, right? Because we know the demand for services has been a key factor in inflation. So this is a really big move to the upside here. We had 42,000 jobs added in the leisure and hospitality space for the month of May. Now, this could be seasonality, right? Think about as you head into the summer, obviously there's going to be a lot of hiring in the hospitality and leisure sectors. But whether or not this is a sign of too much growth that's going to fuel inflation could be an issue for the Fed. Back to you, Shauna and Brad.
All right, Maddie, Anj, and Ali, thanks so much for breaking that down, some of the action that we're seeing across the board when it comes to those gains.